Bitcoin is likely to pull back down to $20,000 over the next 5 to 10 days. And today, we're going to use momentum to really help us identify the top and how long we're going to see the market move sideways to down with high probability. So if you like today's video, like, subscribe, hit the bell notification. Let's dive straight into momentum with Bitcoin. When analyzing any market, you want to have something called a confluence of events. What that means is a number of factors that are pointing to the same thing. Ideally 2, 3, and in the perfect world, 4. Now we don't live in a perfect world, so 3 is more than enough. So what we've got a lot on the chart right now. Now we're going to focus on momentum, but before we do, just want to take into account that Bitcoin has done a 1, 2, 3, 4, 5, and markets tend to move in 5s and 3s. So after a 5-wave move to the upside, we should anticipate some type of pullback in a 3-wave move. And the minimum typical pullback is normally something called the 50% retracement, which is around the $20,000 range. But what I'm going to do today to really give massive value and to give you insight on the market is let's just focus on momentum. Now, there's thousands of momentum indicators. My favorite by far is the stochastics RSI. It's basically this blue and red line that we see at the bottom. But I'm going to show you how we simplify this to get valuable insights of what the market is likely to do when the lines cross over, right? There's a few things that I've put into play that make it easier. So what we want to do is have what's called a higher degree time frame and a lower degree time frame pointing in the same direction. So currently we're on a daily chart. So what I'm going to do, I'm going to pop into a weekly chart, which is regarded as the higher degree time frame. And when we look at the weekly chart, what we can see really clearly is when the blue line crosses below the red on the weekly chart, it's had these highs and the prices move sideways to down. We had this up here. This was the key one. This was the November top of 2021. And we had a big movement to the downside. We had another one here. This was a big movement to the downside. So we want to pay special attention to the higher degree time frame. So what I've simplified on the dashboard at the bottom is when this blue line crosses below the red, it tells us on the weekly momentum. So I'm just going to stick with me on this because it's going to be really valuable. It'll give you a valuable insight into Bitcoin and the market. So what we just looked at was the weekly. Now I have this dashboard over here that tells us what we just saw, that the weekly momentum, the rate of change is strong bear, which means we are in a downtrend in terms of momentum. So we should anticipate the market moving sideways to down over a number of weeks. That's the probability. But now on a lower degree time frame, which is what we're looking at now on the daily chart, we've just had a bearish reversal. In other words, the blue line's crossed below the red, which is now in line with the weekly momentum. And that's what this signal is over here. I've designed this so the signal pops up and it says consider selling or shorting the market or taking profits when the daily momentum and the weekly momentum are pointing in the same direction. And that's what we have. This extra plus icon is telling us that is a strong bear momentum signal because there's some extra filters. And that's what we're going to utilize going forward, or what Bitcoin is likely to do. And by the way, if you want to test out the trend identification yourself, I call it the Trend Identifier Executive Assistant. Why? Because it helps us identify the trend. You can now trial it for £1 for 30 days, and then it's £9.97 thereafter. But it's really, really powerful. And I've included some training in this as well. But I'm going to spend a bit of time when we're looking at Bitcoin on how you can set alerts so you know what the momentum is and when the momentum is changing, when you should be looking to take particular action, whether it's buying, selling, or standing aside. So what I tend to do is I've actually built these for myself because it makes my life easier. I want to be very aware of when these signals occur, especially on the higher degree time frames. And what I have is when the blue line crosses below the red, I have an email trigger. So I get an email and it's very timely and it looks like this. So the email is whatever I want the note to say. So this is something that I've written. I'm going to show you this in a second because it's a really, really powerful tool. And then I can just open the chart and then see if there's relevant information. Now, what we're going to do today when we're looking at Bitcoin is we have had the price move back up, but is it a correction or is it looking like a continuation? And we're going to dive into that because what we want to be doing is looking at momentum. That's like one confluence of events combined with pattern and ideally price. Those three can be a really, really powerful combination. And when three are suggesting the same thing, more often than not, the price will follow. So that's what we're going to look at right now. So I'm just going to show you this, by the way, this notification, because sometimes it's difficult to be in front of the computer all day long, and you just want to be on high alert at certain times of the market when certain key reversals are occurring. So I'm just going to show you how I do this. So I have an alert set up. We can see it over here with Bitcoin. I'm just going to pull it up over here, this down here. And what you're going to see, if I just show it to you like this, so if I just click on the edit, is over here, I write the note. So when I get the email, I know what I'm looking for. So this means a lot to me, but you'll change the note for yourself. Here it says BTC, stands for Bitcoin. Daily M or DM means daily momentum signal on an 8 look back period. It basically means this momentum over here. So I get my email, and the way you can do it is when you get the trend identifier, you literally right click on this or click up here where you can add an alert and just write in any note that you want over here. So if it's Bitcoin reversal, and then you can tell yourself to check chart for entry. Now, when you've set that and the condition occurs, you'll get an email notification, a push notification if you've got the mobile app, and then you look. And that's what we're going to do now. We're going to look at this. So we've got this sell signal over here. What does that mean for us, and where could be a good sell opportunity? Because we've had this big down bar a couple of days ago. We've had some type of pullback to the upside. What does that look like? Now, on a daily chart, it's not that clear, but what we know from the daily and the weekly momentum is the weekly momentum is a strong bear downtrend. So we should anticipate there should be a high that should last for a number of weeks. And we've got a strong bear downtrend on a daily momentum based on this indication over here. So that's called a double time frame. There's two time frames, one higher degree, one lower degree time frame, saying that the momentum is looking down. We also know from what we said at the beginning, if I just pull this back up very quickly, is that we've got a pattern sequence. And if you're familiar with Elliott waves, if you've been watching my stuff for a while, you'll probably be relatively familiar. We've got this 1, 2, 3, 4, 5. So it looks like an end of a wave 5. We have a Fibonacci price zone. We have a double time frame momentum. And we've got this signal, which is based on the momentum as well. So what I'm going to do now is I'm going to now drop down to, it will either be a 4-hour chart or a 1-hour chart to make this clearer, because what this indicates to me is this high should not get exceeded. If it does, we need to reevaluate. But it's more than likely we're going to see Bitcoin over the coming days as the momentum moves down like so. We're probably going to reach the $20,000 range, and we want to make money on the way down. And also be aware that other coins, not in exact correlation, but to a loose correlation to some degree, some more than others, are probably going to move sideways to down also. So now let's just go into an hourly chart, right? So now I'm going to look at this part of the market. So one of the safest times to go into a market is after the first reaction of the reversal. Now, what I mean by that is when I zoom into Bitcoin, the recent price action to the upside from the 13th of February has been another 1, 2, 3, 4, 5. We had this big move to the downside, which took out this swing low. And what that tells us is that this high is very likely to hold. And what we want to analyze is, what does this look like when we're looking at Bitcoin? So now I'm going to just zoom into this. Now, hopefully you're familiar with the basics of Fibonacci retracements. If you're not, certain ratios apply to buying and selling behavior. And a lot of the time, there's a typical retracement. So what we've had is a big sell-off over here that was pretty aggressive to the downside. And there's a particular retracement of a minimum and a maximum zone. And I'm going to do that here live. So we're just going to grab this retracement tool. We're going to click on this high to this low. And the three ratios we want to be really aware of is a typical minimum is 50%, quite common of 61.8%, but a typical maximum is 78.6% retracement. And we can see here that Bitcoin has reacted nicely to the 78.6% retracement. So now what we have is you've got this 5-wave trend to the upside, a wave 5 of a wave 5. So it's the end of a trend. We've got this big movement to the downside. This is referred to as an overbalance of price. We got the first reaction to this downward movement. So now we want to look at, is there a shorting opportunity where we can short the market making money on the way down? We've got a sell signal, which is based on the momentum. I've kept it, let me just double check, because you can change the settings on these as well. Yeah, I've got it on the weekly and the daily. So the weekly momentum is the higher degree time frame. So that's the macro trend. And I've got the lower degree time frame set as the daily trend. And when they both align, we get a sell signal. And that's what we want to be looking at the market for. So we've got this sell signal, and it's a strong sell signal, meaning there's some extra filters that tells us that we're at least probably going to get at least another leg down. That's the high probability as a minimum. So we want to look at that. So I'm just going to clean this up. And I'm going into a bit of detail today, but these are the practicalities when you're looking to trade the market. We're going to want to really be aware of the 78.6%. And this looks like, if we wanted to put a Elliott wave count on it, some type of A, B, C correction. So what I like to do is I believe we're going to see sideways to down for a number of weeks. That's the high probability outcome. But we don't need to get too enamored by that or even too distracted by that. What we can just say is, look, we've had an initial movement to the market down, or downward movement. Let me just change the color of this. Call that a 1 or A. We've had an initial correction. Well, it looks like to be a correction at this point. It's a deep correction. We'll call it a 2 or B. Put a question mark there. As long as this high does not get exceeded. Now, if it does get exceeded, and we can put an alert here. So we can just, I like to do this, where I just go, okay, Bitcoin, end of wave 5 exceeded, re-evaluate. Pattern. So the wave count is valid. However, we want to be aware that the markets can do anything and they owe us nothing. So even though the high probability is that the market is going to move sideways to down, probably aggressively down, because if this ends up being a wave 3 to the downside, wave 3s tend to be more impulsive than a wave 1. And a wave 1, this was pretty impulsive, and we anticipate this to be quite aggressive to the downside. So we want to be prepared for that. So I've put an alert here. You can see this orange triangle over here that just says, if the price goes above this point, I just want to reevaluate, because this could end up being a 1, 2, 3, 4, 5, and we have to just reevaluate the market. That's just the nature of trading. But at this point, we've got bearish daily momentum. The 4-hour is also bearish. The weekly is bearish. We've hit a 78.6% retracement. So unless this is exceeded, the bias should be, the edge is in favor of the downside. Right? Hopefully that's making sense. Now, what you want to do is look for, if you're shorting this market, a logical point to short this market. So there's a few ways. You could be a bit more conservative and say, if the price goes below this point, it's quite far from the market, we go short at this point. You can wait for a swing low, or you can go for this swing low, and each has pros and cons. But the main thing is, whatever you decide to do, that the probability is sideways to down. So I think that's it. I'm going to do one more thing, but just remember, check out the trend identifier. It's a pound, but you get to have the two key tools. One is the dashboard, which is this part down here. And I'll give you the training on how to set this up and how to use it. But then even more powerful than that is the signals. And here you can set the alerts, so you don't have to be in front of the computer, and you can do it on a daily time frame, a 4-hour time frame, a 1-hour time frame. But just know, if you're doing it on a 1-hour time frame, you get a lot of signals during the day, because there's 24 new bars in a day on a 1-hour chart. But on a daily time frame, there's only one new bar. So you'll probably get 1, 2, maybe 3 signals a week which is great, which means you don't have to be in front of the computer all of the time. So what I'm going to finish on with Bitcoin is I'm going to do some practical trade strategies on how I'm looking at this market. I'm actually looking to short Ethereum, which is very similar to this pattern over here. But what we're going to do is let's quickly get on the same page of what I've drawn over here. Let me just show you this. I just want to make this visible on the 1 hour chart because I want to show you something. Okay, so what we have on our hands with Bitcoin, if I can squeeze it into the chart, is the red line is the bigger degree wave count. And so I just want you to be aware of this because it's powerful when you got 2 degrees of wave counts. So this red line over here is saying it looks like the final part of a wave 5, right? So there's a wave 3, 4, 5. But the blue is the wave 5 broken down. And when a wave 5 breaks down to 5 waves, we can pinpoint the end of that trend. And that's what we're looking to do over here. And this is important because when it comes to risk management, you want to look at, I always ask myself the question, what is the minimum that the market is likely to do if I'm not wrong? And at that point, in the ideal world, I would like to become risk-free, if possible. As long as it's logical, mechanical, objective, and I'm not breaking any of my rules, that would be my favorite. Right? So I'm just going to keep it like this. So again, what you'll see here, and it's a bit detailed here today, but it's a wave 5 of a lower degree wave count of a wave 5. So we're getting pinpoint accuracy to the end of a trend. Now we've exceeded the wave 4 of this wave 5 over here. And that is usually a first indication that this top is confirmed. Now, there's never a 100% guarantee that the top is confirmed, but it's a strong pattern reversal signal. It's the biggest sell-off that we've had in this whole sequence because this was a little correction, this was a little correction, and look at the size of this move to the downside. That's an indication that this top is likely or highly probable to hold. But then what I do is I ask myself the question, if I'm wrong, and this is not the end of a 5-wave trend, and it goes higher to the upside, what is the minimum that is very likely to occur? And the minimum that's likely to occur is a 3-wave move, right? A, B, C as a minimum. Now, I'm anticipating that it's going to continue further down, and I want to be in that trend further down that may last a number of weeks. But at this point, if this occurs, we can become risk-free. And if the market ends up moving up, which is always possible, we lose no money. And then we can just reevaluate and then look to enter the market again. We may even make some profits if we're wrong about the market. And that's what we're talking about when it comes to risk management. So let's just draw that out. So let's just play devil's advocate and say we're wrong. What is the minimum that is very likely to occur? Well, if we just do a retracement of this blue wave 5 count on the upside, and we just draw the three typical levels, the minimum is 50%, 62, and 78.6%. I'm going to do something called a Fibonacci time retracement. We'll probably find we're close to the retracement already. It's the typical minimum time, the most common time, and then the maximum time. So what that tells us, I'm just going to squeeze it in so we can see the full range, is Bitcoin as a minimum, if the trend is to continue up, is likely to drop to at least $23,000 to even $22,000 range. So if, let's just say you go short on the market below this swing low over here, you go right, and you put your stop loss above here or above here, and the market triggers you in. Well, if the market goes down like so into this range, what you can do is move your stop loss to your entry point. So you now break even or risk free. Then if the market continues to the upside, you lose nothing. But we want to be in the market because what we anticipate, so this is the minimum expectation, and what is the optimistic expectation on a short trade for this. I'm just going to go to the daily chart for this, and hopefully it will make sense to you. I'm just going to pull it up like so. I'm going to just clean this up. The next expectation as a minimum is more towards the $20,000 range. But there is a case for Bitcoin, and we don't know in advance. There's no way of knowing. But what we do know is that the weekly momentum is bearish. The daily momentum is bearish. We've had this irregular, what looks like to be an A, B, C movement of Bitcoin. So there's a decent chance, especially if the sell-off is strong, that Bitcoin may go below this low, which is towards the $15,000 to $12,000 mark, maybe even a bit lower. So again, I'm going to summarize on this. So the absolute minimum expectations is something like this, right? Then beyond that, the next expectation for Bitcoin, when I'm looking to short this, is this three-way moves. But there is a case, and we don't know. There's no way of knowing. But we have to be in it to win it. But we want to be risk-free at these stages way before and even locking in profits. But there is a case where it may be that Bitcoin has a big sell-off and we have a big five-wave move to the downside and we hit this zone. Whatever the scenario, I want to be risk-free here. I want to have locked-in profits over here. And I want to be in the trade just in case this does happen and then tighten my stop loss and lock in profits. Yeah, hopefully that's making sense. So what we're looking for is pattern, price, time. But the key thing that we're focusing on today was momentum. And it's the reason why I actually built this, full confession, for myself, just to make it easier for me to read the markets. So I'm going to show you, download this or get this. It's only £1, 30 days. And if you take the training and use it, it's a really, really powerful tool. I'm just going to show you a couple of trades that I'm looking to take. One of which is Ethereum. So very similar to Bitcoin. I've got an order in on Ethereum. I'm just going to show you very similar in the sense of on a daily chart. So this is a 4-hour chart. Let me just show you on the daily chart first. Let's go on the daily chart with Ethereum. What you'll see is the weekly momentum is bearish. The daily momentum is deeply overbought and is about to become bearish, right? And that's important so we can anticipate what's likely to occur. And Ethereum and Bitcoin are very similar in price action. One follows the other to a certain degree. So when I'm looking at that, I'm going, okay, it's likely Ethereum is going to do something similar to Bitcoin. That's my thesis. Will it or won't it? We don't know for sure, and we can never know for sure. But what we have with Ethereum, when I'm looking at an hourly chart, is very similar. We've got this wave 4 being exceeded. We've got what looks like to be an ABC correction at the 78.6%. So what I want to do with Ethereum is I want to go short on a swing low, stop loss above here. My minimum expectation is in this zone over here. And the same thing, if the market moves here, I want to become risk-free, move my stop loss. And the bigger degree trend with Ethereum, if I just recap on the daily, is we are likely, over the next few weeks, going to see a big movement to the downside. But it might be that we even see a bigger trend to the downside and see Ethereum retest $1,000 Ethereum. How likely is that? Look, the momentum is down. If we just ignore the technology and everything else and we just go, it's buying and selling behavior and crowds operate in a predictable manner. If we exceed this low over here, if the price closes in this range over here, which is the $1,300 mark, it's likely we're going to see a further continuation to the downside and a final sell-off before we see some nice big upward movements. Let's also just look at one other trade. This is the Forex markets. It's similar. I'm using it. I'll show you this anyway. This is the US dollar versus the Canadian dollar. It's the same methodology. It's the opposite though, because we've got the weekly trend is a strong bull. We've got the daily trend is a bull, as in it's gone above here. We've got a move up. We got an ABC correction, go long on a 1 bar high, stop loss below here, and we're anticipating that US dollar, Canadian dollar is going to continue to the upside. But the one I wanted to show you was the order for Litecoin. Litecoin sticking on a daily chart. Hasn't been triggered yet, but it may get triggered later on today. Is very similar to Bitcoin in the sense of we've had this 5-wave movement to the upside, but the weekly momentum, strong bear downtrend. We've had a bearish reversal on the daily momentum, which you can see in the dashboard. You can also see on the signal over here. We got the sell signal on this bar. And you want to have an entry strategy. So mine on this is go short on a 1 bar low. So the last closed bar, which is yesterday's bar. If the price goes below this bar, I want to be short on the market. What should the market not do if the trend is to continue to the downside? Well, it shouldn't exceed the high. So that's where my stop loss goes. How much am I going to risk to find out if I'm right? Well, it's 2%. But again, what is the minimum expectations for Litecoin? Well, I've drawn it on the chart. This is my business plan. It says it over here. It says unit 1, which is half of my position, minimum expectation, and I want to become risk-free if the price of Litecoin reaches the $83, $84 mark, right? Which is quite far away from the market right now. But what is the possibility of this trend? How far could it go down? Well, let's just have a look. Let's just zoom out over here. When we're looking at Litecoin and getting things into perspective, this looks like some type of corrective move, and it might be the end of a major correction. And if it is, it means the price is going to continue below this low over here, which is below $50. So that is a pretty big move to the downside. Now, will it or won't it do that? I have no idea. All I can say is the weekly momentum is bearish. The daily momentum is bearish. We've had a 1, 2, 3, 4, 5-wave move to the upside. We've hit some price retracement and price zones. So now we want to be short on the market, risk 2% if we're right. If we're wrong and we get triggered, maximum we can lose is 2%. But we want to become risk-free at this point over here. And it's highly probable that Litecoin is likely to hit at least this point. But we want to see, I want to be in this trend if it continues to the downside and hold it for a number of days, if not a number of weeks. So hopefully you found that really, really powerful today, because we want to have a predictable way, an objective, logical way of identifying the trend and then trading in the direction of that trend. So check out the trend identifier dashboard. Again, I call it the executive assistant, mainly because you can set the alerts so you don't have to be focusing. It's almost like someone else is watching the screen for you. And when your minimum conditions are met, you'll get an email. And when you get that email, then you just click on the open the chart, and it will look like this. Click on open the chart and then evaluate. Is there a valid pattern sequence? And so on and so forth. Is there anything else I wanted to cover? I think there was one other thing. It was on Litecoin. Let me just double check one last thing. I was trying to show you, one last thing with Litecoin was with the pattern sequence with Litecoin. Again, similar. We've had a nice movement to the downside. What looks like to be some type of correction. So it's likely, and we got this bar, which is the initial move, we're likely going to see a continuation to the downside, and the 4-hour momentum has made a bearish reversal as well. So we can see that is in line with the daily as well. So this is now a triple time frame momentum pointing to the downside, which makes it highly probable, but never guaranteed. So that's why we want to have acceptable capital exposure. Let's finish on a quote. I normally read a quote from my book, but actually we're going to go with this one today. We're going to go with, the trend is your friend. Ride it until its end, until it reaches its bend. We want to have a logical methodology that you can repeat constantly on identifying the beginning of a trend, but also the end of a trend as well.